Imagine a country building a financial system unlike any other, one deliberately walled off from global markets. That's China. And today we're diving deep into Red Capitalism.
By Carl Walter and Fraser Howie.
Right. To understand how China's system works,
Yeah.
published in 2012,
Yeah.
this book is really our foundation to investigate
It's a
the forces behind China's economic boom.
It is.
We'll uncover the strategies they've used,
Yeah.
understand how this system functions,
Yeah.
and explore the potential vulnerabilities hidden within their unique model.
It's a fascinating look into a system that operates by a very different set of rules. I mean, we often think of global markets as interconnected,
Right.
but China has intentionally created its own financial ecosystem.
So we're essentially stepping back in time to 2012, using this book as a lens to understand the present. To fully grasp this, can you paint us a picture of China just 30 years ago?
Yeah. Think about a country emerging from the shadows of the Cultural Revolution. In 1978, Deng Xiaoping took leadership, and China cautiously began opening up to the world. And what we witnessed was a remarkable transformation. Bustling coastal cities became symbols of this new era, but behind this modernization, China was embracing a unique form of capitalism.
Many might assume it was just a classic free market at work, but it sounds like there's more to the story.
It's a bit more nuanced than that.
Yeah.
China cleverly leveraged foreign investment while simultaneously implementing its own distinct financial strategies. You know, they were participating in the global capitalist system,
Right.
but on their own terms, with their own set of rules.
That definitely piques my curiosity. Can you tell me more about these specific financial strategies? What sets them apart?
One of the most striking aspects is their banking system. It operates as a closed system,
Okay.
heavily influenced by the Communist Party,
Yeah.
with very minimal involvement from foreign banks.
You refer to it as a closed system. Can you expand on what that means for everyday banking in China?
Picture it as a self-contained financial ecosystem. The big four state-owned banks hold significant power. They're directing capital to state-owned enterprises, or SOEs. These SOEs, in essence, function as the engines driving China's economic growth.
So the government's control over the banks essentially allows them to control the flow of money within their economy. But where does the red in red capitalism come into play? How does this differ from traditional capitalism?
That's where the story gets really interesting. The influence of the Communist Party is woven throughout their entire system. Let's take loans, for example.
While loans might seem like a mundane topic, I have a feeling this is where the unique aspects of red capitalism truly shine through.
It becomes more complex when you consider the concept of non-performing loans, or NPLs. These are essentially loans that are unlikely to be repaid. A significant number of NPLs can create serious instability within any financial system. In the late 1990s, China faced a massive NPL crisis, and their approach to resolving it was quite unique.
I recall reading about this. They implemented a creative solution, didn't they?
They did. They established asset management companies, or AMCs. Think of these AMCs as large entities designed to absorb the bad loans from the banks.
So rather than addressing the issue directly, it seems they opted to transfer the problem to these AMCs. Could you elaborate on how these AMCs function?
They're not simply debt collectors. Their role is to restructure these bad loans, potentially selling off assets attached to them to recover some of the lost funds. This approach allowed the banks to regain stability, but it also raises questions about transparency. Is this truly a sustainable solution, or are they simply masking the problem?
It appears they successfully navigated the crisis. But could this strategy create issues down the line?
That's a key question. Their massive lending spree in 2009 and 2010 raises concerns about a potential new wave of NPLs. And it highlights a central theme in red capitalism. China's ability to control its financial system comes at a cost.
So we've discussed the tightly controlled banking system and these enigmatic AMCs. What other elements of China's financial system might surprise us?
Let's shift our attention to their bond market. It presents another example of tight government control.
This bond market sounds intriguing. How does it operate differently from what we're used to?
Envision a bond market where prices are essentially set artificially with very minimal activity in the secondary market. This is China's bond market in a nutshell.
If prices aren't accurately reflecting the true value of the bonds, who benefits from this system?
This structure primarily serves the government's needs, not necessarily the investors. Within this manipulated bond market, there are key players to keep in mind, particularly the China Development Bank, or CDB. This state-owned policy bank often operates in competition with the big four banks, creating an interesting dynamic.
So there's a power struggle happening within the bond market itself.
Yeah.
How does this impact the overall development of their financial system?
It certainly poses challenges. This internal competition hinders the natural development of the bond market, highlighting the complexities of this system. We've explored their carefully controlled banking system and a bond market operating under its own set of rules. What about their stock market?
Right.
It's often viewed as a symbol of capitalism. How does it function within China's unique model?
Yeah, that's a great question.
While the stock markets may appear small compared to the massive banking system, they play a crucial role in China's power dynamics and the ongoing reforms of SOEs.
It's more than just a platform for financial gain. It's a stage for power plays.
Mm.
Can you shed light on how this power dynamic unfolds within the stock market?
Imagine a group of powerful state entities, often referred to as the national team,
Okay.
strategically manipulating IPOs to their advantage. They utilize strategic investors and undervalued prices to benefit both SOEs and themselves, creating an uneven playing field for individual investors.
This system sounds like it disadvantages individual investors. Do you have any specific examples of this manipulation in action?
There are numerous cases. Take the PetroChina IPO, for instance. It was significantly undervalued, generating substantial profits for those in the know,
Right.
while leaving individual investors with minimal returns.
Trying to grasp all these intricate elements of China's financial system is quite a challenge. Is there a simpler way to conceptualize it as a whole?
Interestingly, you can draw a parallel between China's financial system and the Forbidden City.
The Forbidden City.
Yeah.
You're referring to the ancient palace in Beijing. What's the connection?
Think about the Forbidden City structure. Walled-off courtyards, limited access, and a central power figure. This mirrors the compartmentalized nature of China's financial institutions
Okay.
and the difficulty in achieving true coordination.
Each institution operates as its own separate entity, much like the courtyards within the Forbidden City. But who holds the ultimate power? The equivalent of the emperor within China's financial system.
That's the key point. There's no single emperor of finance making all the decisions. Instead, we see various entities vying for power within their respective domains, creating a system with inherent complexities
Right.
and potential for conflict.
It's a fascinating and complex system, filled with contradictions and power struggles. However, China's economy has flourished under this model. Can this approach truly withstand the pressure of global markets and its own internal conflicts?
That's a question we'll delve into further as we continue our exploration of red capitalism. The cracks are certainly there, and it remains to be seen whether this unique model can endure the challenges that lie ahead.
We just discussed this intriguing idea that China's financial system resembles the Forbidden City in its structure and power dynamics. It's a fascinating comparison, but it also raises questions about its long-term sustainability. What are some of those potential vulnerabilities that could disrupt this seemingly well-controlled system?
Let's start with a factor that many countries are grappling with: demographics. China's population is aging rapidly. And just consider the impact of this trend on a system so heavily reliant on high savings rates and investments.
That makes sense. A smaller workforce means fewer contributions to those vast household savings that have fueled China's growth.
Exactly. And as the elderly population grows, the demand for social services will inevitably increase, putting additional strain on government finances. It's a double-edged sword. Less revenue coming in and greater expenditures going out.
So what other factors contribute to this potential instability?
Remember those local financing platforms we touched upon earlier? The ones utilizing, creative accounting
Right.
to fund those large infrastructure projects.
Yes, the ones channeling funds through trust companies and other unconventional means.
Right. Their escalating debt levels are a significant concern. They've accumulated trillions of RMB in debt,
Wow.
often backed by assets of questionable value.
This sounds like a recipe for trouble. Could you elaborate on why this debt situation is so precarious?
We'll imagine a scenario where those loans start to sour. It could trigger a domino effect across the entire financial system, potentially destabilizing the very foundations of their economy.
So we've identified an aging population and a mountain of local government debt as potential threats. Are there any other concerns that stand out to you?
Well, China's dependence on exports is another vulnerability.
But exports have been the driving force behind their economic success for decades. How could this strength become a weakness?
While it's true that exports have been their engine of growth, this reliance makes them susceptible to fluctuations in the global economy. Recall what transpired during the 2008 financial crisis. Demand for Chinese goods plummeted, dealing a substantial blow to their economy.
So if another global recession were to occur or if trade tensions escalate, China's economy would likely suffer.
Precisely. And this vulnerability underscores the need for China to diversify its economy and find new sources of growth to mitigate the risks associated with those external shocks.
So we've discussed these internal pressures, but are there any external factors that could impact their financial fortress?
The emergence of the offshore yuan market, particularly in Hong Kong, is an intriguing development that warrants our attention.
Offshore yuan. That sounds complex. Could you break it down for me?
Okay, so imagine you're a company doing business with China. You require yuan to pay your suppliers,
Right.
but the yuan isn't freely convertible
Right.
on the global market. So where do you turn?
I'd venture to say Hong Kong. They have a vibrant market for yuan-denominated products, right?
Exactly. Hong Kong has become a central hub for offshore yuan trading, allowing businesses and investors to access yuan outside mainland China.
It sounds like an alternative pathway into China's financial system. Could you explain the implications of this development?
While this emergence of the offshore yuan market has significant implications for China's traditionally closed system, it represents a step towards greater internationalization of the yuan, whether Beijing fully embraces it or not. And this introduces new dynamics and challenges to their control over currency flows.
We've discussed internal vulnerabilities and external pressures, but what about the potential for social unrest? We often hear stories of protests in China. Could this become a destabilizing force?
That's a crucial question. As the gap between rich and poor widens,
Right.
and access to financial opportunities remains restricted for many, social unrest could indeed pose a threat to the system's stability.
It's a delicate balance. When people perceive an unfair system that favors the elite, frustration and resentment can build, potentially leading to unrest.
The Communist Party's legitimacy is partially based on its ability to deliver economic prosperity
No.
for the masses. If this implicit social contract breaks down, the consequences could be significant.
It seems like we've uncovered a complex web of potential vulnerabilities, both internal and external. As we move into the final part of our deep dive, I'm eager to explore what all of this means for China's future and the implications for the global economy as a whole. We've journeyed through the intricate workings of China's financial system, a system intentionally designed to be distinct from the rest of the world. We uncovered potential vulnerabilities that could really shake its foundations. Now the question remains, what does the future hold for this forbidden city of finance? Can it withstand these mounting pressures, both within and outside its walls?
That's the million-dollar question, and it's one that doesn't have a simple answer. Despite the vulnerabilities we've discussed, China has a remarkable history of navigating crises and adapting to change.
It's like they have a knack for escaping seemingly impossible situations, defying expectations time and time again. What's their secret? What tools do they have to maintain this control?
They have several levers they can pull. Remember those AMCs we discussed?
Okay.
They could be deployed again to absorb bad loans and stabilize the banks if needed.
Ah, yes, the debt sponges. They're ready to soak up any excess financial spillage. Are there any other mechanisms they can utilize?
They also have a substantial safety net in the form of their massive foreign exchange reserves. These reserves provide a significant buffer against external economic shocks.
So they have some breathing room, at least for now. But what about the long-term challenges? Can they continue to postpone addressing these fundamental issues?
That's where the real debate lies. Some experts argue that China's financial system is too opaque, too distorted, and too reliant on government intervention to be sustainable in the long run. They believe that fundamental reforms are necessary for long-term stability.
So are they headed for an inevitable collapse?
Not necessarily. Others believe that China is capable of reforming its system gradually. They envision a path where China slowly opens up to market forces while still maintaining a degree of control. It's a delicate balancing act.
A gradual evolution rather than a sudden revolution. Are there any indications that they are moving in this direction?
There are signs. The development of the offshore yuan market, for example, suggests a willingness to experiment with greater financial liberalization. It's a step towards integrating with global markets while still retaining some control.
It's a high-stakes game they're playing, trying to balance stability with the need for change. What's the key takeaway for our listeners? What should we be considering as we contemplate the future of red capitalism?
Here's what I find most compelling. China's financial system is a paradox. It's a capitalist engine operating within a communist framework, a hybrid model that has defied expectations and reshaped the global economic landscape.
It's a financial chimera, a fascinating blend of seemingly contradictory forces. But why should this matter to our listeners? How does this impact their daily life?
Understanding China's financial system is crucial for understanding the world we live in. It influences global trade, investment flows, and even the prices we pay for goods and services.
So it's not just some abstract concept.
Yeah.
It has very real implications for our financial futures.
Exactly. The decisions China makes will have ripple effects across the world, impacting businesses, investors, and individuals alike. It's a topic that deserves our attention.
Well said. I encourage our listeners to continue exploring this fascinating topic. There are numerous resources available, from in-depth research papers to articles that break down complex concepts into more digestible pieces. And of course, Red Capitalism by Carl Walter and Fraser Howie is an excellent starting point.
It's a journey worth embarking on. As China's influence on the global stage continues to grow, understanding their financial system is no longer a luxury, but a necessity.
Those are wise words to conclude on. Thank you for joining us on this deep dive into Red Capitalism. Until next time, keep learning, keep questioning, and keep exploring.